Nigeria's central bank has raised the key interest rate to its highest level since it was adopted in 2006, with plans to attract more international investors. The Monetary Policy Committee raised the benchmark rate to 18% from 17.5% at its most recent meeting about a week ago, being the sixth consecutive hike and the smallest rise in the current tightening cycle. In this report, Perpetual Fashami Peter reviewed the impact of the rate hikes on the nation's inflationary figures.
Have continued to trail the Central Bank of Nigeria's decision to increase the monetary policy rate MPR benchmark, also known as the interest rate, from 17.5% to 18% to tackle inflation. While many analysts believe rate hikes are not in the best interest of manufacturers and businesses, others believe the Monetary Policy Committee cannot look on while inflation continues to rise.
Yeah, actually, that was not what I expected, but I alluded to the trend that is going globally, that even some mature economy where we have seen a decline in their inflation, but they still went ahead to hike rate. And that is why when we saw the February inflation data that just inch up by 0.09, I knew that there will be no kind of either left for change or a decline. And then I told them in one of my programs that we expect to see either 25 basis points or 50. That 100 basis points at this point is not necessary again, because the economy is already on a slow motion. Not only that, the data that came from the month of February concerning the purchasing manager index, we saw a decline from 53.5 to 44.7. That was a sharp direction that business activity in Nigeria has kind of contracted. And at the same time, the cash crunch, also we can see the bearing or the effect on the economic activities. That signal that at this point, for those that understand economic activities and impact on the economy, know that when there's a slowdown in the economy, it has an effect either on the immediate or on the long run. For me, I was expecting that because of these indicators that I just mentioned, that CBN or the committee will wait and say, okay, let's see how we come out of this slowdown and see how we can push more funds into the system after they're able to kind of retrieve about 2.3 trillion from the system as a result of what the cash flow. Because when there's no liquidity in the system, business will not thrive.
Yes, the increase in rate was not far from expectation. When you look at what happened some few days before the MPC meeting, the inflation figures came out and showed that inflation for February increased compared to the last figure we saw in January. So inflation is currently at 21.91%. So from that figure, it was that CBN was likely going, the MPC was likely going to increase rates by a maximum of 50 basis points, which they did during the meeting. Because as we continue to see inflationary pressures, they are expected to do something about it due to their primary responsibility of maintaining price stability. So they took their action in order to curb the that we have seen from January, because we saw a deceleration in inflation in December. But in January and in February, we saw an increase. So that's why the decision is not far from expectation.
Many analysts agree on the impact of the continued hike in bringing down the nation's core inflation rate.
Yeah, I would say there's so many factors when you look at the inflation figures. The factors driving it, we talked about food inflation and also increase in price of energy, and some of those are outside the control of the CBN. So as much as the CBN tried to use monetary policies to manage inflation, there are other factors that are driving it, and those factors are very much with us. So the CBN tries as much as is within its powers to, and great extent, a lot of persons will tell you that it's not yielding results, but to some extent, we see that when you look at the figures for December, it yielded some result. And look at the month-on-month, I think we have seen a deceleration in terms of month-on-month figures. Those are some of the things, good parts of some of the policies that the CBN have taken. Because from the fiscal end of things, we have not really seen action. So if we have seen a deceleration month on month, we will most likely attribute it to some of the steps taken by the CBN, the MPC.
One is that CBN committee give that because of the expected subsidy removal, and which the equipment government is trying to remove before they give back into another government. If that is what they are trying to do, yes, it makes sense to hide the date because in of that, because once you remove subsidy, transportation costs will go up, and that will affect price of because every goods that comes from the farm anywhere in the around the economy is movement, and that movement that means you're going to pay more in transport, and that one will factor into the cost of that goods or service. On that note, that is really where I know kind of okay. Let me slow down and see what ideally or what is happening in the economy reality. You don't need any another type, but that will increase cost of borrowing, and that will slow down economy further.
Beyond monetary policy rate hike, systemically addressing Nigeria's economic challenges and a firm synergy between the monetary and fiscal policy committees should be the magic wand the nation needs to deflate its spiraling inflation bubble.
Yes, definitely. It has an impact on the economy. As we have seen in the developed countries, we have seen currently the financial system is under pressure in the developed market, leading to about 3 banks currently have gone in that distress, talking about the Silicon Valley Bank, Signature Bank, and also Credit Suisse that have been bought over by UBS. And those experiences have been attributed to the frequent rate hikes that happened in 2022. So it has an impact on the economy, definitely. But I will always say that anytime in every MPC meeting, CBN always mention the fact that they will not watch things once inflation figures keep growing. So, and they continue to call on the fiscal managers to do something on their own end. And that has been an issue. We have not really seen much action with respect to the fiscal policy managers in terms of reining in inflation, because despite the CBN effort, the MPC committee, monetary policy committee effort, we need to see more action with respect to the insecurity. Talking about food inflation, one of the main drivers of food inflation is the insecurity in the north. That has made a lot of farmers to leave their farms. People are scared to go to their farms. Definitely has an impact. Talking about the structural issues, those are logistic issues in terms of transportation of this food that we have not really seen reform in that. Another area is having more investment in the food value chain.
The CBN have used interest rate and going to do all, noting that even when they adjust rates up, because we still have money separation that is not within the bank offer, the impact of the rate adjustment of inflation will not reflect on the economy, and that's why they have gone to use the money separation through this swap. But for me, that is not just only collecting money. They need more policies to address job creation, more policies to make sure that we have good access to cheaper funds. And when you are increasing rates, automatically you are driving people away from business. Companies start closing down because of high cost of living. And it's a circle, that oil itself. If cost of borrowing is high, I will tell you people lay off their staff. And not be there, their unemployment is also on increase. For me, the only way to address the issue of unemployment and to grow the economy is when we start seeing normalization in the interest rate and also seeing a kind of a slowdown.
In line with global best practice, the Central Bank of Nigeria attempts to control the nation's inflation with a monetary policy rate and, most recently, the supply of money. In theory, this works with other tools in controlling inflation, such as supply-side policies, wages, price control, and fiscal policy. Perpetua Fasami Peter reporting for New Central Television.
And in just the past few days, we've seen a number of African central banks make the similar decision that Nigeria's CBN NPC made, and that is to, of course, raise interest rates. This is with the world continuing to fight against inflation, which we see has led to protests in some areas. We're also following very closely the cost of living protests that have been happening in Kenya. We're following the situation in South Africa as well, where the NPC has also decided to raise rates, and there are a few more NPC decisions that will be coming in the coming weeks. Will we see the trend continue across the continent, and will there be some economies that decide to buck the trend, hold it steady, or maybe even start a declining trend? All of those things are things you can continue to find here on Business Edge, where we put African business, finance, and the economy front and center. Don't forget to follow us on social media. We are at News Central TV. You can download our mobile app and, of course, watch us on the platforms we are available. Until next time, I'm Tolulope Adeleru-Balogun. Do have a pleasant day.